When you see the statistics, there is certainly no shortage of them pointing towards weakness, but there are a few figures that have been hanging on for dear life and the desperate won't let it go. Everyone's favorite, the U3 unemployment rate, the most quoted unintentional joke on earth, always good for a laugh. Then we have the always reported down jobs numbers. Will the general public ever learn? Of course not, and that's why you came here for the truth. So let me unveil that for you. It's interesting to see that there are always two sides to the story. If you look at the mainstream media, you get one side. If you look at the Money GPS, you get the other. I think it's important that people do follow the mainstream media. In my opinion, always good for a laugh. But you want to get both sides of the story because without the full picture, you are always going to be in the dark. This information that you're getting at the Money GPS is all publicly available. There's nothing in here that you can't find by doing some digging. The problem is that it's so obscure, it's so difficult to dig into this data that the general public doesn't have time for it. The average person would rather just put on the news and whatever they tell them, that's the information that they're going to receive. They're going to go to their Apple News, which shows 5 articles in a given day. That's the only thing that they know in that given day. 5 articles already pre-selected for them. But then there's you. You come here because you're willing to dig deeper, and I commend your efforts. I know that you're not just watching the Money GPS. You're looking into this on your own. You're actually reading the books. You're looking at the history. You're seeing the charts. You're actively paying attention to what's going on, and I want to show you some really good information today. Let's get right into it. Empire State Manufacturing Index, something I have showed you before, and you can see that just like so many other stats, since 2018, this has been heading downward. It is basically at the point at which we are contracting. And of course, as we have seen, this goes up and down. It is not in a straight line, but the general trend has been, along with the PMI, along with so many other stats piling up, showing you that the current status of the economy within the United States, but more of an exaggerated form globally. Weakness in manufacturing is one key reason the Federal Reserve is expected to cut its benchmark interest rate for the second straight meeting later this week. Trade tensions, global weakness, and a strong dollar have combined to hit the factory sector hard. And we know that this has been the case. All of this data is stuff that I have been providing you, and I'm sure you've been seeing on your own. The Empire State Index is the first of several regional manufacturing readings that give economists a sense of national trends. The ISM Factory Index, 49.1, that is a contraction, lowest level since January 2016. There are so many others, of course. We've looked at the PMIs just about everywhere, top to bottom. It's showing weakness, stagnation, or contraction all going on right now. Empire Future General Activity slumped from 25.7 to 13.7 and is one of the 9 indicators in my purely survey-based GDP model. The model is starting to look quite frightening. Again, this is just one more indicator, just another one to pile up on top of all of the others. So whenever I see the criticism coming from one place or another, they're always trying to pinpoint and pigeonhole all of these little tiny facts, yet there are so many. If you create a video, or maybe someone creates a blog post, or they write an article and it's pointing to something, that isn't the only thing that they've ever acknowledged. Most people aren't going to read that individual's book. Most people aren't going to look into the real data. They are simply going to take what they see there. They try to just pinpoint and pluck out one little thing, and it makes them feel good. Of course, the people who are truly educated will take it a step deeper, and then they will judge it for themselves. They don't need to criticize, they simply make the judgments on their own. Now, Real Investment Advice had this article, and I went through, I grabbed some charts out of it and some information that I need to read to you, starting with this: employment 3-month average of growth. And you can see that when we get to this case here, a contraction that is experienced, historically, this leads to a recession. Now, there are ups and downs, and it's not exactly a perfect indicator, but this is a good way to start off the information I'm going to present to you, okay? It's just one of many, and it's just interesting interesting to see the trends that we have with employment, not the unemployment rate. Please, I can't laugh right now. I'm in the middle of recording a video. Please don't make me laugh. The unemployment rate is truly a joke. Stand-up comedians should use the U3 unemployment rate as part of their material, and they would get a few laughs, at least from me. Okay, check this out. There are 28.8 million small businesses in the United States, and they have 56.8 million employees. Small businesses, defined as businesses with fewer than 500 employees, account for 99.7% of all businesses in the United States. This gives you a breakdown of how that looks. Think about that for a second here. Of all the business, not the total amount of employees, but I'm talking about the actual total amount of businesses today. 99.7% of them are what they would consider small businesses. And if you look at the actual data for small businesses, it is not good right now. I have shown you the charts before, and essentially small businesses are basically a bellwether for what's coming. And they show us right now that there is weakness, that there is concern, that the employers are looking at the situation, they're holding off. They're saying, you know what, we can't really withstand what these trillion-dollar valued companies can. We can't do this kind of thing, so we're just gonna wait it out. We're gonna see what happens, see how they do their things, see how they react, and maybe next year we'll be able to expand. Maybe next year we're gonna add to some departments, we're gonna expand into other buildings, take on new floors, and so on. So that leads me more into the next one I'll show you, but take a look at the bottom. You could see employment breakdown in the US. That's a different story, okay? Because you can see that surely a lot of major corporations out there employ a lot of people. However, when you see it for what it is, as I just described a moment ago, if we can get the information from these small businesses and be able to use them as a bellwether, it becomes so telling. Small businesses drive the economy, employment, and wages. Therefore, what the NFIB says is extremely relevant to what is happening in the actual economy versus the headline economic data from the government sources. So that's what you can look at, the U3 unemployment rate. Okay, well, that's one small subset of the data. You can expand that to the U6 unemployment rate. You can look at the shadow stats data. You can look at the civilian labor force participation rate. Okay, all of these are different pieces of information, each have their own weight, but this right here is something that people need to understand. In August, the survey declined 1.6 points to 103.1. While that may not sound like much, it is where the deterioration occurred that is most important. And this just shows you here, the lighter blue line is the S&P 500, and then behind that, this is the NFIB Small Business Optimism Index, and it peaked out last year, and that has been declining. It's interesting because that goes in line with so many other statistics. Why? What happened last year in 2018? So many things have been following this exact same pattern. I could show you chart after chart after chart that tracks this pattern, that at some point in 2018, many of them in September, October timeframe, coming down from there in the fourth quarter and not stopping. It didn't increase like the S&P 500 did. It didn't do what the stocks did. So many of them just piling up, and it should be a telltale sign for anybody that is paying attention. NFIB Confidence versus small cap stocks. Look how correlated these two charts are. It's unbelievable. I just wanted to bring that to you because it is clearly telling us where we are headed. Now, they might both turn around, but at least at this time, the general trend has been downward. NFIB survey, percentage of firms expecting to increase employment versus the actual increase in employment. The blue line is planning to increase and the red line is actual increases, and guess what? They are always far below their expectations. This happens all the time. You hear about this time and time again. Whether you work for a small company or a big company, they tell you, you know what, we can't do it this quarter. We don't have the budget for it. Next quarter, it's gonna happen. We'll try to fit it in. And then that time comes and they'll say, well, you know what, maybe next year's budget is going to be a lot better. Let's go through that. Let's just, take it the way it is for now, and we'll expand next year. I know you're really tight on resources, but let's just wait until next year and we'll get somebody. And then next year comes and things are tight. Everybody's got to tighten their belts. Everybody's got to really work hard. And that never really comes, at least for some corporations. And according to this, 99.7% small businesses here, grabbing the data from there, and you can see so many of them never live up to their potential. That's all. I'm going to end the video there. If you found it informative, then do me a favor, hit the like button. By hitting the thumbs up button, you are supporting this channel. So I do appreciate that very much. If you want to build a business and be able to actually make money on your own, then the Amazon GPS is for you. It is a completely free step-by-step e-course for everybody to get started today. Even if you have remote interest in this at all, just check it out. Look at the videos that are available to you, the AmazonGPS.com. If you want the financial education you were not taught in school, these two books have everything you need from top to bottom, A to Z. You got the 4 asset classes, how to profit, the history, reducing your debt, so much more. Check it out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Wait, don't go anywhere. Have you watched this video yet? I break it all down for you, talking about the serious economic situation we are in today. Check it out, click on the video, and I will see you there.